It has been a great privilege and honor to have Mr. Sourabh Gupta as part of our annual Ground View Conference representing Hotelivate, which is Indian as well as global premier one-stop consulting for the hospitality sector. And it gives me an immense pleasure to introduce Mr. Sourabh Gupta. Thanks so much, and really appreciate to spare time that you could be part of our conference. Just to start with how we have been, how you've seen the sector over last 3 years. I mean, we've seen a complete resurrection from where it was, and how you have seen that come through in last 3 years.
Right. So, firstly, thanks for having me over here, Arjun. Thanks. Yeah. So, I think the sector is firmly back. And 3 years back, when I first attended this conference, I had to make people understand that this is the sign of a new upcycle.
Sure.
I think it's clearly not required anymore. People believe that it is an upcycle. And the good part about this upcycle is that making the hotels is so difficult. It takes 4 or 5 years to develop a hotel, and then another 2-3 years at the very least to stabilize them.
Sure.
Which means that we are seeing a 6 to 7 year period from now when hotels shall have a extended period of high revenues and high profit. The supply is very limited in most cities, growing by a CAGR of 1.5 to about 4%. Which means that there is practically very less supply coming in. All in all, bodes well for the sector. You can see that impact in hotel stocks, and you can see that impact in the investment moving into the sector. So I think it's going to do well from here on as well.
Great, because we saw that similar phase come in 2007-8. We saw the peak of the sector, but obviously at that time we didn't have this dynamics of supply demand. Supply was parallel running to the kind of demand and the prices that we see. You see maybe some catching up to those levels in terms of ARR going forward.
So what we have to understand is that our base, the room number base has changed firstly. 2008, the room supply was much lesser than what it is today, and most of it was the rates that you saw were in the luxury and the upscale category. Most of the demand was skewed towards luxury and upscale, so it was very top heavy. Now you have a much larger base. You have 140,000 rooms, and of the 140,000 rooms, half of them are budget and mid-scale. So the ARR for the market needs to be seen in the right perspective.
Sure. And the other thing is, most commonly asked, I'm sure you've been asked that question in terms of, we've always seen aviation running, complementing hospitality sector in many ways. We've had a couple of quarters with disruption in terms of aviation. In many cases, what we understand, people extending an overnight stay and hence impacting in a positive way in terms of occupancies or maybe an ARR. Do you see that trend continue, or you see some disruption coming from aviation going forward, especially the holiday season or?
Sure. So, look, short term, there'll be some pain. Jet Airways has created a vacuum which is yet to be filled up, and the prices are high for tickets, and we do anticipate some impact would be there on hotels in leisure destinations, summer leisure destinations this season. But that's just a short term.
Sure.
I think on the medium term basis, aviation is growing with a CAGR, if I'm not mistaken, of about 15% odd. And there is a direct correlation between aviation and hotel rooms.
Sure.
People who are flying need some place to stay. It's a very simple correlation. So we are very sure that it was 117 million people last year, or last to last year, and then moved to 138 million in 2018.
Sure.
So the growth is steep. so the number of flyers are increasing. The room demand needs to increase as well and will increase. Additionally, I think new airports, as and when they keep getting opened, whether it is the Jewar airport at Noida or the Mopa airport at Goa, will unlock huge amounts of demand that we have currently no sight of.
Sure, sure. Interesting. And just last, just wanted to understand what's your thought on the mid-scale to slightly upper mid-scale hotels. You see a flurry of them, Lemon Tree and the likes coming in. Any thoughts on those and whether those guys would in a way support an ARR rather than just competing with the pure and luxury market?
No, so I think the market is very value driven or very price conscious in India, and it will continue to be. We recently did a study where we actually calculated the total amount of supply that we have in this market, including alternate accommodation, new age hotels, and the unbranded and independent hotels. And that's about 2.7 million rooms in this country. So the branded space is only 5% of that at 140 odd thousand. So for a very long period of time, we have overlooked this data,
Sure.
all of us, and we have all said, how do these 140,000 rooms benefit? And most of the stock market is also focused towards this 140,000. But I think there is a huge change which is happening in the unbranded and independent space. They are going through a major churn in the form of OTAs and in the form of players like Oyo and now Airbnb. Those are also some of the push and pulls that are happening. Overall, however, we feel that mid-scale sector or the mid-scale hotels are currently giving the best return on investment for investors.
Sure. So the similar models to Lemon Tree and the likes, basically.
That's right. They're right now poised very nicely while their development cost is on the lower side.
Sure.
In an up cycle, which we are in now, they stand to gain. They stand to gain because they can increase the price, and then the market doesn't have a problem playing them. Yes.
Sure. And one last question is, how do you see next 3 years if you have to, let's say you have to put it in a very simplistic way?
Oh, we are growing. I think we see the demand for hotel rooms growing by, on an average, about 10% over the next 5 years. Actually, the last 3 years has grown by 10%. There is no reason for that pace to slow down. We have a new Prime Minister, we have a new reset button on the economy. I think these are exciting times, and we are very excited about them.
Fine. So we share the excitement and the triumph in the sector, since we've been actually talking about the sector for over last almost 4-5 years,
Yes.
When nobody was really talking. So really appreciate your participation in each of our conferences, and we continue to do that and take our relationship further.
Thanks.
And we really treasure your company and relationship.
Thanks. It's a pleasure. Thank you.
Thanks so much.
Thanks.
Thank you.